What is up everyone, and welcome back to another video. Today we're taking another look at Dogecoin, as it has been performing exactly how we said it would from the previous video. In the previous video, Dogecoin was sitting at roughly 17.7 cents, and since it fell to roughly 15.5 cents, and that's exactly where we said it would fall to, as you can see here by the arrows. Now, the main reason it fell is obviously because we had a huge run up, and after that run up, there's going to be some selling pressure because a lot of people are going to be taking profits. Most people were entering towards the lower stages here, and that's 60-70% profits at these highs right now. So we have a lot of interesting days approaching, and the main one being in a few days, which is going to be the presidential election in the USA. Obviously Trump versus Kamala, and with Elon heavily endorsing Trump and heavily endorsing Dogecoin, there's sort of a chain reaction if Trump wins the election. Now, not only is it good for the entire crypto market if Trump wins the election, as he is very pro crypto, which he has made it, very public across his Twitter and his campaigns. So that is overall bullish for the crypto market, but it's also bullish for Elon Musk, as he is heavily backing Trump. And with Elon Musk heavily backing Dogecoin, and even giving us hints of Dogecoin at these campaigns with the Department of Government Efficiency, that essentially shows us that it's going to be sort of a chain reaction. Trump wins, Elon wins, Dogecoin wins, and if that does happen, then we can expect some sort of pump to happen, at least for Dogecoin. Now, we're going to jump into the technicals in just a second, but essentially this selling is quite healthy, quite normal. It's everything you'd expect. It's also on the 0.618 level here on the Fibonacci, which the 0.618, 0.786 area is usually the golden zone for either buying or selling, and that is obviously the zone that we've reached. Now, highs that we're really going to be looking to target is going to be the previous high of this year at 22.8 cents, so 23 cents roughly. And for buys, it really depends on how much you want to risk. Obviously, if you entered right here on the sold, then you'd currently be in profits, but it is just a slight bounce that we have right now, so we could very well just consolidate here until we see any sort of news come out. Now, the slightly better zone is going to be this zone right here, roughly 13 cents. And the reason this is slightly better is because it's more established. It was previously a resistance level, as you see here, and then once we broke through it, you can see again it resisted, but once we broke through, it actually started using it as a support again. Broke through, but then used it as a support, created an order block, and pumped right through. So this zone also looks really good. It's also the 0.382 level on the Fibonacci, so everything is aligning perfectly. Now, another thing we do need to take a look at though is Bitcoin, and Bitcoin is obviously retracing slightly. It nearly hit an all-time high the other day. It was a few dollars away, I think only $200 away from an all-time high, and now it's just retesting this area. As long as we don't fall straight back in and continue the consolidation down, then I think Bitcoin will be safe, and the entire crypto market should start to look for more highs. Again, Bitcoin dominance is a key factor, and with Bitcoin dominance on the rise, it's not looking great for altcoins. Obviously, nothing will remain rising forever, and there will be a crash eventually on dominance. We just don't know when. However, when that time does come, then altcoins will see a huge pump. Another thing is the S&P. So with the S&P creating a new all-time high, 2 weeks ago, it has since seen a slight sell-off. And whilst the sell-off is not major, we're still trading well above the highs we had this year. And it looks like we can start to use this area as a support area. We also have this fair value gap created right here. So, what we could see is next week, we come in to fill this gap and then maybe continue down. But back to Dogecoin we go. So what sort of trades would we be looking for on Dogecoin? Well, before we look into that, make sure to check out the Discord down below for some trades, because we are absolutely crushing it in there, as you can see on the screen right now. Every single day we're sending out futures trades and also spot trades, so make sure to check it out down below. Now back to Dogecoin. So yeah, for trade purposes, we're going to be looking to enter on this support area right here. Stops, we're going to look for some sort of consolidation before we enter, so stops are most likely going to go below or just at this low. And obviously we're not going to be entering straight away as we tap in. We're going to wait for us to, on the lower time frame, like the 1 hour for example, like we did here, where we broke structure, we didn't create a lower low, we could enter here now, like something like this, a lower time frame sort of pattern that we can find. So that's what we're going to be looking for on this area, and we're going to be targeting the highs right here of roughly 17 cents, so nearly 30% gain. And overall, we're going to be looking for, let's just say for argument's sake, it's going to be slightly higher because we're finding a lower time frame entry, roughly a 3-hour trade, which is not bad. So That's essentially what we're going to be trying to look for. Again, it might not happen. We might just stay at this level here and pump through, which is also good because we have a few long-term spot bags secured from the lows back in the bear market. And that is it for Dogecoin. Now, if you did enjoy the video, make sure to like and subscribe. Again, if you want to be getting trades every single day, then check out the Discord down below. Thank you all for watching. If you need a place to buy, sell, or trade Dogecoin, check out the links down below also for exchanges. Please like and subscribe. I'll see you all tomorrow. Goodbye, guys.